world of finance, there's a quiet but powerful shift underway. And Bo Hines, digital assets executive and former congressional candidate, just made it clear. We're not only accounting for where the Bitcoin is, we're laying the infrastructure to start buying it. This isn't just a statement, it's a signal, a message to Wall Street, to Silicon Valley, and maybe to you. Why are institutions moving so deliberately into the Bitcoin space? Simple. The risk of not having exposure to digital assets is beginning to outweigh the risk of getting in. The SEC has approved spot Bitcoin ETFs. Major banks are building trading desks for digital assets. And more quietly, family offices, hedge funds, and asset managers are hiring blockchain experts. They're not just watching anymore, they're positioning. When Bo Hines says they're laying the infrastructure, he's talking about more than just digital wallets and cold storage. He means regulatory compliance frameworks.
He means internal risk models built for a decentralized world. He means enterprise-grade custodial systems that can safely hold billions. Before institutions can move capital, they need the rails, and those rails are being laid right now. Think of it like this. Before Amazon could deliver millions of packages a day, it had to build warehouses, trucks, data centers. The same thing is happening with Bitcoin. Bo Hines and executives like him aren't gambling. They're engineering. BlackRock, Fidelity, Goldman Sachs. They're not just dipping their toes in. BlackRock's iShares Bitcoin Trust has seen billions in inflows. Fidelity is offering direct Bitcoin trading to its 45 million retail customers. These are not experiments anymore. They are beachheads. And the infrastructure Bo Hines is building, it's being designed for scale, for $100 million trades, for sovereign funds, for nations. Why would institutions even want Bitcoin? Because in a world of sovereign debt crises, inflation, uncertainty, and digital innovation, Bitcoin is emerging as the digital gold of the 21st century. It's scarce, it's borderless, it's programmable, and it's getting harder to ignore. Bo Hines sees it as a strategic asset, not just a speculative one. An asset that belongs in pension funds, insurance reserves, and corporate balance sheets. So here's the trillion-dollar question. What happens when these institutions do start buying? Let's do the math. There's around 21 million Bitcoin in existence, roughly 19.7 million already mined, and a large percentage is held long-term by entities who won't sell easily. If just 1% of global institutional capital moves into Bitcoin, you're looking at trillions of dollars chasing a tiny, finite supply. The result? A supply shock. Price discovery at levels we haven't even imagined yet. Bo Hines and others aren't just preparing for higher prices. They're preparing for a new financial order. One where digital assets sit alongside stocks, bonds, and commodities. Where blockchain-based settlement replaces paper-based friction. Where money flows 24/7. Without borders, delays, or middlemen. In that future, Bitcoin is not an anomaly. It's a foundation. And infrastructure is everything. We're not only accounting for where the Bitcoin is, we're laying the infrastructure to start buying it. The future is being built. Brick by digital brick.
And when the gates finally open, the flood may not be gradual.
Yeah, so if you look at the EO, it did mandate an accounting to take place in which Treasury has spearheaded that. They have received the numbers from the different agencies inside of government. There are a lot of different actors that held on to some Bitcoin in some fashion or another. Now the process begins in terms of establishing the reserve, the actual infrastructure behind it, and getting all of that accomplished. There's nothing in the EO that mandates that report become public, but we could choose to make it public at some point. And we are certainly keen on the idea of accumulation. We've stated publicly that Bitcoin is digital gold. We believe it's in the best interest of the United States to garner as much as we can possibly get. I've said that at every conference that I've spoken at in the last 2 to 3 months. Now, obviously, this has to be done in budget-neutral ways that don't cost the taxpayer a dime. The president was clear about that in the executive order. But I think we have some very creative minds, 2 of which are sitting up here with me. And I think we'll begin moving very quickly on that.
Well, 4 or 5 years ago, the mainstream conversation around Bitcoin was dominated by one word: FUD. Fear, uncertainty, doubt. We heard it on financial news, we saw it in government statements. Bitcoin is for criminals. It has no real-world use. It's a speculative bubble with no backing. It's not real technology. But here's the thing, narratives don't age well when the fundamentals are strong. And Bitcoin's fundamentals, they've only gotten clearer, more mature, and more undeniable. We said it in a previous episode, and we'll say it again. Bitcoin is breaking past the outdated narratives. Not because the media changed its tone, but because the world is starting to wake up to the truth behind the tech. The myth of Bitcoin being for criminals, that narrative is collapsing under data. On-chain analysis shows that illicit activity makes up a fraction of a percent of all Bitcoin transactions. Meanwhile, cash, the dollar, euro, yen, still fuels the vast majority of black market activity. But no one calls that a criminal's currency. Bitcoin is simply traceable, transparent, and accountable. Not exactly a criminal's dream, is it? Now let's talk use cases, because this is where the rubber meets the road. Bitcoin is no longer just something you hodl in a cold wallet. It's become a lifeline in collapsing economies. It's become a remittance rail in countries with 200% inflation. It's become a store of value in places where central banks devalue currency overnight. Ask citizens in Argentina, Nigeria, Lebanon, or Venezuela what Bitcoin means to them, and you won't get theory. You'll get survival. We're also seeing the rise of Lightning Network adoption, instant payments, virtually zero fees, global reach. Try wiring $5 to someone across the world through your bank. Now try doing it over Lightning. One takes days and fees, the other takes seconds and costs less than a cent. Which one sounds more like the future? Here's where it gets even more interesting. We're now seeing major figures in institutions, yes, the very people who once dismissed or fought Bitcoin, begin to change their tune. Recently, even officials from the Bank for International Settlements, the so-called central bank of central banks, have begun to admit something crucial. Bitcoin is fundamentally different from central bank digital currencies. Bitcoin is not a CBDC. Bitcoin is not part of a unified government-controlled ledger. Bitcoin is trustless and decentralized by design. That's not a concession. That's an acknowledgement of Bitcoin's core strength. It operates outside the control of any central authority. It is permissionless, immutable, predictable. It's not a tool of surveillance or a programmable puppet of monetary policy. It is the opposite. Let's talk about trust. Because trust, ironically, is what Bitcoin doesn't need. And that's revolutionary. You don't need to trust a central bank. You don't need to trust a government.
You don't even need to trust a third-party intermediary. You verify. Mathematically, cryptographically, transparently. This is a system where rules replace rulers. That's the paradigm shift. And for the first time in history, we have money that is digital, finite, and outside the reach of political manipulation. That is not just innovation. That's sovereignty in code. Let's be very clear. Bitcoin and CBDCs are not cousins. They are opposites. CBDCs are designed for control. Programmable money that can be frozen, limited, taxed, or expired. Bitcoin is designed for freedom. Money that can't be printed at will, can't be censored, and can't be confiscated without access to your keys. CBDCs answer to governments. Bitcoin answers to no one. That's why the recognition from international bodies like the BIS is so significant. They're not saying Bitcoin is good or bad.
The unified ledger idea is pretty much separate from Bitcoin in the sense that Bitcoin is a public blockchain. It relies on this decentralized notion of trust. So rather than having trusted intermediaries, the idea is that you can somehow have a system where trust itself is decentralized, and the whole system works based on the consensus as to what the underlying state of the world is, subject to the updating of the ledger through some decentralized mechanism. Whereas the vision that we have in mind is very much based on central bank money. So it's based on the trust in central bank money, the settlement finality, and the singleness, as Andrea also mentioned. I guess the common element is the functionality that results from atomic settlement and the programmability. But the programmability, the technology underlying programmability doesn't need to farm out the notion of trust to a decentralized consensus mechanism. So I would answer your question like that.
So, where does this all lead? The narrative is shifting. The infrastructure is maturing. The regulators are catching up. And the public, well, they're starting to wake up. We are watching a monetary evolution unfold in real time. What gold was to the 20th century, Bitcoin may be to the 21st, except this time it's borderless, divisible, instantly transferable, and available to anyone with a smartphone and internet connection. From Wall Street to Main Street, from El Salvador to Switzerland, this asset, once dismissed as fringe, is becoming a fixture. It's no longer magic internet money, it's economic resilience. It's digital sovereignty. It's the protocol layer for value in a trustless age. So, here's what you need to ask yourself. If even the central bankers are starting to admit Bitcoin is different, if the FUD is finally clearing, and if the rails are being laid for a future where this technology is not just tolerated but relied upon, are you still listening to the headlines from 2017? Or are you seeing the revolution happening right now? Because the world is changing. And Bitcoin is leading that change. Thanks for tuning in. If today's conversation made you pause, if it challenged what you thought you knew about Bitcoin, good. That's the point. Because we're not just talking about price charts or market cycles. We're talking about a foundational shift in how the world thinks about money, value, and trust. So whether you're an investor, a builder, a policymaker, or just a curious mind, it's time to ask, where will you stand when the old financial system meets the new one? Are you preparing for the future or waiting to be surprised by it? This is more than a trend. This is the next protocol layer of the global economy. We'll see you next time. Until then, stay sharp, stay sovereign, stay curious.